Welcome to Epoch Trades, where we trade the new age. Today we're going to be covering key levels on HOT. As always, our key level criteria to look for is swing highs and swing lows, multiple rejections, acted as support and resistance, drastic moves away, obvious to spot, and recently formed. So we're going to be plotting the key levels on the monthly and weekly time frames. As all charts you can notice, they all kind of look the same. As price comes up, we have our first swing high, reverse, and a lower high, or sometimes even a higher high. But most of these charts, actually all of these charts, are at all-time lows, considering their previous price action. So keep that in mind as we run through our key levels. Now, what we can first start off with is our first swing high. So we can plot that on the chart. And we can also plot this level here. Now, as price came around this level and reversed, we can see price action actually reacted right here. So let's plot in another level. Now, something interesting here is that these two levels line up with the price action. So price actually acted as support and resistance as price tried to come back, but essentially followed through. So now let's go to the weekly and see what else we can find. Now on the weekly chart, we notice a candlestick's closing, so we plot a key level. And as price comes down, we can see that it is kind of respecting this range here. As price came up, tried to break through, and always remember that these are zones, not not solid levels of price, is what I'm trying to say. So what we can actually do is maybe we can plot a zone here to further illustrate that point, where when price reaches this zone, we are waiting to see a reaction from price. As we can see, long wick here, and price tried to break up, but there was no further momentum upwards. Price came down, and we can see this long wick here with bullish momentum that followed. Price came down with a long wick rejecting from this level. As price continued to fall, we seen price come back up. Now our support flipped into resistance, and price failed to break back above, so it has fallen. So now let's see on our most recent price action here. We really have to zoom in to see this. Now we can say that there is some sort of support level being formed here. So let's put in a zone. And if we see price reversing back up, we want to know that it will break through this key level for further upside. As we can see that there has been a rejection here, price came down and has had multiple rejections from this key zone coming back up, and another rejection from the same key level. So this is very key. As price comes back down, we are seeing a reaction from our key zone that we previously established because of price action in this area. So now, resetting our chart, we can see our chart is way more structured than previously, as if we take away the drawings, this is what our chart looks like. We don't really know where to establish where price will go, other than the obvious areas, which makes our levels very key. So let's add our key levels back in, and maybe you guys can go plot these on your own chart. Thank you for watching. Hope you enjoyed. Like and subscribe for more.